This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks here on Stockbox with Alan Green. At the end of yet another week, Alan, how are you doing?
I'm fine, thank you, Mark. Yes, it's been a good week. Well, it's been a short week, of course, and I think we're coming up for another short week, aren't we?
Yes, we are. Yeah.
It's another long weekend, which is great. It was light this time of year, although it does mean that volume does tend to be light in the markets. But of course, that's just the way things are. But yes, it's the sun's shining. Just wondering if it's going to warm up a bit for the weekend. So all set.
And did you enjoy? I think were you on holiday recently? Did you have a nice trip?
Yeah, it was great. Yes, we went to the New Forest, buzzed around in a motorhome, and just had a really chill time. And it was great. Apart from the fact that my wife had a bit of a cold and a cough, and there's this super bug apparently doing the rounds at the moment. So and I then picked it up, and but yeah, it was great. And of course, as they say, change is as good as a rest, and you come back feeling refreshed and ready to go. Yeah.
Excellent. Okay, good. Well, before we start on today's research talks, I just want to very quickly mention the UK Investor Show in London on the 21st of May. Stockbox are going to be there. It's the first time we're going to be at an event, and it's the first time I think these events have happened for a couple of years. I remember the previous one I went to. It is a good opportunity for people to come down and meet CEOs face-to-face and ask those questions. And you can get a free ticket by using our code STOCKBOX22. If you just enter that on the UK Investor Show website, that will get you a free ticket. Will you be heading down, Alan, do you think?
I will be, yes. I was at the because, of course, as you say, prior to COVID, this time of year, there are always the big two investment shows. There was the Master Investor Show. I was there early this year, and of course, UK Investor Show, which promises to be bigger and better than ever. So I shall definitely be there. Yeah, so it's it'll be good to spend some time with you guys on the stand.
We'll actually meet you for the first time in person.
Exactly. Yes. Yeah. That's the thing. Yeah. Everything's been conducted in lockdown, hasn't it? We've sort of seen and met each other virtually, but yeah, it'll be good to see everyone face to face.
I remember the first time I spoke to you, I was in my greenhouse at my allotment in the UK. That was a long time ago. I reckon that was over 2 years ago now.
I know.
That was the first time I spoke to you. And then, here we are. This is number 88 of Research Talks. I just checked this morning.
It's incredible, isn't it? Yeah. And I mean, that period of time has just flown by, really. It just seems, and of course, you think, God, it's Friday. It's another research talk day, and we speak again, and seems like a few hours have elapsed, but actually, it's an entire week. So yeah,
indeed. So today we're going to be doing a bit of a special, aren't we? It's a POW special because there are so many projects within Power Metal Resources, and it can be quite difficult to attribute a value. But hopefully today you're going to help us with that.
Well, yes, I've just tried to, and again, without sort of resorting to a complex mathematical equation or solution, because Power has 14 plus projects, and those projects are always developing and moving on at any given time. It's very difficult to value the company, and I think we've seen some very strong movements in the share price this week. The stocks regained 1.7p, and that was a key sort of benchmark, if you like. The company raised $1 million at the end of last year, or toward the end of the year in 2021 at that level. So that was always a key benchmark, I think, and the stock regained that this week, which is a great sign. But I think, as we're generally agreed, the valuation in the markets for resource stocks, the stocks are very undervalued. But particularly, I think, with Power, because it has this raft of projects, and how do you ascribe a valuation to each one? So I've attempted to do that today. So what I'm going to do is just go through each of the projects and undertake a brief summary, and then I'm going to look at comparing the relative commodity groups, bundling them into projects, and trying to look at a company that's listed on the markets with comparable projects, where we can perhaps draw a valuation comparison. So hopefully people will find this helpful. But of course, Power Metal The company is run and epitomised by Paul Johnson, Chief Executive Officer. I think arguably, well, there's no argument, actually, he's the hardest working chief exec out there. The company has many different projects, and of course, from an administrative standpoint, it's a huge logistical challenge to run the company. But he's put together a very good team around him. Paul is, of course, very experienced in public life. As chief executive of Metal Tiger, he was instrumental and oversaw the company with the Sandfire project, and of course that released a lot of value for shareholders. Previously, Paul has also been chairman of ECR Minerals, and of course we've spoken about ECR Minerals many times, Mark, and ECR recently appointed a new chief executive after Craig Brown's untimely death last year. And Paul, of course, prior to that, also a non-exec director at Greatling Gold PLC, and Greatling Gold needs no introduction to retail investors. It really epitomises what we're all looking for when we invest into resource stocks. We're looking for these huge returns, and of course, Greatling Gold discovered Havieron from a company with a market valuation about where Power Metals market valuation sits now. The valuation rocketed up to at one stage $1.5 billion. So that's a multi bagger if ever there was one. And I think that summarizes the opportunities that many people see in the markets. And of course, if you have something like that happen in your portfolio, it's a wonderful experience, and it's a life-changing experience too, because financially it changes everything. So the chairman of Power Metal is Scott Richardson Brown. He's basically in the banking and finance area. He was a partner in the corporate broking finance division of Oriel Securities, and is director on a number of AIM companies. And Edmund Shaw, non-exec director, he's one of the founding partners of New Pick Capital, and he's also very active in the small cap market. So as Power Metal has developed, it has acquired stakes in projects at various levels. In some cases, it's an earn-in. In other cases, it's outright ownership of the asset, and each project, of course, can cover a range of commodities. Hanetti, for example, is prospective for nickel, copper, platinum group metals, gold, and lithium, and others are just prospective for one asset only. So I think probably taking each asset in alphabetical order is the easiest way to approach this. So I'm going to start with the Alamo Gold Project, and this is it's a gold project in western Arizona in the USA, and Power Metal has an opportunity to earn up to 75%, subject to various milestones being achieved. Currently, the team on the ground there are undertaking work in multiple test pits and sampling works, and we're awaiting field assay results from the on-site work program there at the moment. So there will be some news due on Alamo very shortly. And then, of course, we come to the other two A's on the list. We have the Athabasca Basin asset, which is the Athabasca uranium asset, which is a 100% owned uranium project in central Canada. The Athabasca Basin is prospective for so many companies, so Seeking Metals, but in particular for Power Metal, they've acquired the Athabasca Basin uranium assets. So the team on the ground there have been working to undertake desktop analysis, undertaking some ground exploration, and exploration there is ongoing at the moment. Athabasca is targeted for disposal or a potential IPO at some point, and certainly the size and scale, it's suitable for an earn-in partner at some point. So news will no doubt be no doubt be arriving very shortly on that. We then had the Orthia North lithium aspect or lithium prospect, again Canada. The earn-in process has been completed, so this is a 100% owned prospect by Power Metal Resources. The earn-in soil and rock sampling work has been completed there. And again, technical review of exploration results, and the company's in the process of defining the next steps to take the prospect forward. And of course, uranium has exploded in value. Perhaps that's the wrong term to use, but it's certainly rocketed in value recently, and a lot of small uranium companies that have been sitting on arguably dormant projects have suddenly come back to life again. So it's a very active sector. I think what I'll do, I'll also address the CELTA project, which is this is also part of the FDR, the FDR upcoming IPO. That's FDR Australia, of course, and the CELTA project is a little further south than the Patterson Province project, and again, field reconnaissance work is underway there, mapping and sampling work, and we will be receiving some updates on that shortly. So we then come to the Ditau project. Of course, this is a 50% owned project. Ditau is it's in Botswana, of course, in Central Africa, a prospective for rare earth metals. Drilling work is currently underway there at the moment, and of course this is going to be targeted potentially for IPO disposal upcoming as we go forward. It's also being drilled, of course, and worked in conjunction with Kavango Resources, who, of course, Mark, you featured on the Stockbox Premier last night. So we then come to the Kalahari copper belt assets, and there's a well-established copper belt on the South Ganzi Ridge in Botswana. This is southwest Botswana. Power Metal, the team there, again have undertaken exploration work across the South Ganzi Ridge and also at the South Ganzi Extension Mamuno license areas, and the team had defined some drill targets there. Drill targets have been selected, and we're expecting to hear further news about drills being moved to site and work commencing later on this year. Again, targeted for IPO disposal, probably as soon as Q3 this year. So we then come to the Malopo Farms project, and of course Malopo Farms it's a complex asset that is prospective for nickel and copper and cobalt, and this is part of the Kalahari Key. The Kalahari Key project, or the Kalahari Key Mineral Exploration joint venture, and again, Power Metal here owns. It owns 53% of the asset, as I say, prospective for nickel, copper, and platinum group metals. The team there are currently determining next exploration steps and an action plan to take the asset forward. We then move in Africa from Botswana to Tanzania, and Tanzania, of course, the team have the Haneti project, which is a joint venture with Katoro Gold. Of course, extensive diamond drilling work program. The extensive diamond drilling program was completed a little earlier on this year. Power Metal have a 35% interest here. They bought in and own a 35% interest here. Currently awaiting laboratory assay results, and obviously once we have those, then the team can determine the next steps. So back to Australia, Victoria Goldfields. Of course, we have the New Ballarat Gold Corporation, and New Ballarat Gold Corporation have assets adjacent to the Ballarat gold mine, which of course is in the Victoria Goldfields. I mentioned, of course, at the start that Paul was previously chairman of ECR Minerals. ECR Minerals, of course, have the Creswick asset, which is about 25 kilometres to the north of Ballarat. And there's a geological anomaly called the Dimmock's Main Shale that runs from Creswick all the way down through Ballarat, where there is, of course, the Ballarat gold mine. You've got the Ballarat Eastern Arena Goldfields to the northeast of Ballarat, and then you've got the Ballarat gold mine itself, which is a narrow vein mine, has been producing for years, and there are many historical workings within the joint venture license area. This is, of course, a 49% owned asset. Red Rock Resources own the other 51%. They have a local fellow, the exploration manager David Holden, on the ground there, who is overseeing the work, very experienced geologist who's worked in the area for years, and many historical gold workings. And in fact, they've discovered new, previously undiscovered workings through exploration work on the asset. So again, there's a diamond drill program currently underway. Very exciting, and I'm sure we'll see some of the features, such as the mineral chutes that were described by the ECR geologist Adam Jones. We'll see very similar mineralogy emerging from the area, because of course it's featured in narrow vein gold mines such as Ballarat. So more news to come from there, certainly in the next few months. So I mentioned the CELTA project, of course, the uranium project. There's also the Patterson project, which forms part of the FDR asset, and of course FDR is upcoming for an IPO later this year. It's focused on the projects there. Power Metal's got an 83.3% interest here, and there's the Wallal asset, where the company have spotted a red spot, a giant magnetic anomaly, not dissimilar to the Haviran red spot that was initially discovered by the team at Greatland Gold, who of course subsequently developed the Haviran asset. So I know there's a huge amount of excitement about this one, because there are many geological similarities, and the group are currently putting together the findings from these multiple work programs. There are also drill permissions been applied for. They're waiting for final approvals, and preparing for planned deep diamond drilling. And of course, this is all in conjunction with the IPO for FDR, which is upcoming later on this year. So that's really a summary of the developments across the Power Metal portfolio of assets to date. And of course that's fine and good. So we then need to, excuse the pun, drill down a bit more and try and find how we can ascribe value to this. Mm-hmm. Now Power Metal shares, I mentioned at the start, they've had a strong week, currently trading at just on 1.7p as I'm looking at it. That's the mid price, and that gives the company a market cap of 24.7 million. Now, I've said before when I've spoken about Power Metal, if one of the projects the company is working on comes to fruition, then the market cap of that project alone will dwarf the market cap of the entire company. But that's a bit of a sweeping statement. So what I've attempted to do here is to put into context the valuation of each asset. So I'm going to start with the New Ballarat Gold Company. And of course, I've sort of outlined where we are with this. So the field updates, awaiting assay results. Now, ECR Minerals, for instance, owns the Bayliston and Creswick assets. It's also got an asset in the Philippines, the Dangday Gold Project, as well as exploration licenses in Tambo to the east of Victoria, and the Lulworth Range asset, which is up in North Queensland. So ECR's got a valuation currently of 14 million. So probably, given that the company has properties in Creswick and Bayliston, and there's an extensive drilling campaign already undertaken there, we can probably loosely ascribe a value of 5 to 6 million to the Creswick asset. Also, given that ECR have recently acquired a new license between Creswick and Ballarat, covering the Eastern Arena Goldfields. So if we ascribe a valuation to the New Ballarat Gold Company, and these are conservative valuations, I believe, of about $6 million. And again, that's subject to interpretation, and somebody else may have a completely different view. But my view is we have to start here somewhere, and of course, that's where I believe, given the progress that the team are making with the drilling campaign, probably where we are. So then, if we lump in the uranium assets, so if we put say Athabasca and Celta together, Athabasca is a 100% owned uranium project. It covers a huge area in the Athabasca Basin region in Canada. Celta, as I've already outlined, the team are awaiting field updates, mapping and sampling currently underway there, and that's going to be part of the FDR package. So if we compare, how do we compare? So there's a company listed on the TSX Venture market in Canada called Blue Sky Uranium. Their epic code is BSK. Now, Blue Sky Uranium have assets in Argentina, which are uranium assets: the Amarillo Grande, Sierra Colonos, the Tierras Colorados, and also Sierra Pava. Trading on a market capitalization of 43 million Canadian dollars, which equates to a valuation of 27 million. Now, given the progress they've made with their assets, I don't think it's unreasonable to ascribe a valuation of, say, 20 to 22 million to both Athabasca and Celta combined. And I'm just trying to draw a comparison. And again, I reiterate, part of the issue with Power Metal is because there are so many projects within the company, some of the projects don't really get perhaps the investor attention that they should do. So I think this is a good way to do it. So we then come down to the copper assets. So you've got the Kalahari Copper Belt asset, which is the 50% owned asset with Kavango. We've got some copper mineralization at Malopo. And of course, we also have the Gawler project in Australia, which I didn't mention. The Gawler project is, of course, a copper project, and that has been worked on and developed. So if we package those together, how do we compare this? Well, Castillo Copper is listed on the ASX and also listed in London too. Epic code CCZ. Company's got 4 assets. It's got the NWK copper asset, Broken Hill, and the Kanga asset, which are all Australia based. Also has interest in the Zambia copper belt as well, and that currently trades on a valuation of 28.5 Australian dollars, which is about 16 million sterling. So I'm just again putting a rough comparison in place. So if we equate the potential of the Kalahari copper asset, Malopo and Gawler assets packaged together, that's roughly what we come out with. So we then, within that, have a bunch of pre-IPO material. So I've also, of course, included some of the assets I've just outlined, which are packaged in with these companies. So I'm just going to take one which isn't included in this, and that is, of course, Gold Metal Resources. And Gold Metal is coming to market a little later on this year. It's coming to market in June, and that, of course, has the package of assets in Nevada. We have the tungsten mine, which is the Pilot Hill mine, and we have the Golconda and Stonewall and Garfield assets packaged within that company. Pre-IPO valuation of 3.3 million. So do we ascribe a higher valuation to it at this point? Well, let's just say we give it a valuation of 4 million. So we then come to, if we package the New Ballarat Gold Company, the comparison to Blue Sky Uranium with Athabasca, Celta, and Althea North, and the comparison of Kalahari Copper, Malopo, and Gawler with Castillo Copper, that brings us to a rough total of about 54 million. So we then come to the other assets. We've got the Tati asset, which is a 100% owned. Tati is a 100% owned asset, also in Botswana, owned by Power Metal, and it's just been awarded additional prospecting licenses, and these cover major gold anomalies within the Tati Greenstone Belt. And Paul said when these were announced, it's a significant achievement for the project. The exploration footprint now covers multiple targets across a highly prospective area for gold mineralization. That's, of course, the Tati Greenstone Belt. So they are accelerating exploration efforts to look at and test these new gold in soil anomalies that they found there. So it's a gold. It's also prospective for nickel too. So if you had a company with a standalone asset like that, you'd probably be looking at a base valuation of around 7 to 8 million. So I've ascribed 8 million valuation to Tati. Now, someone listening to this could shoot me down in flames and come up with a load of data to say why it wouldn't be valued at that. But this is, I think, if every investor looking at Power Metal goes through this process, you can arrive at a valuation, and this is the valuation I've arrived at. So we then go back to Canada. We've got the Silver Peak project in Canada. And this, of course, is in British Columbia. It's the former Eureka silver mine in British Columbia, and it's historically produced silver for many years. Power Metal owns 30% of that. So what would that be worth if it were redeveloped and came out to market now? Probably 10 million. So we'll give a valuation of 3 million to Silver Peak as it stands at the moment. And that may well be coming to market in its own right as a separate silver entity. Also with Kavango and the team, we got the Ditau Rare Earths project. Power Metal has a 50% stake here with Kavango. Drilling work has been undertaken there. So how do we value Ditau? Now, I chose to value this or compare to Altona Rare Earths, which has, of course, the Monte Moambi asset in Africa, and work is undertaken there. Prospective for rare earth metals. So valuation with Altona at the moment about 3.5 to 4 million. So given that Power Metal owns 50%, I've come out with a loose valuation of around 2 million. So give or take. So we then come back to the Alamo Gold project. So an opportunity to earn up to 75%. I said right at the start that, of course, the progress with Alamo, excavation of multiple test pits and mapping and sampling works that be undertaken, and field and assay results are awaited there from the on-site program that's been undertaken. So I describe a valuation of probably some 5 billion to that. So in total, then, if I top these up, we've got a total valuation. So we've got roughly 6 million for ECR, the ECR comparison with the new Ballarat Gold Company. We've then got a 27 million valuation for the Athabasca Seltzer and Seltzer assets compared to Blue Sky Uranium. We then got the copper comparisons: Kalahari Copper, Malopo, Gawler. Compare that to Castillo Copper, you probably got a valuation of around 16 million. So we then have the pre-IPO assets, and of course the FDR and FCM assets are built within that. So we then take the GMR asset, that's the gold metal asset, and add a 4 million capitalization to that. Tati at 8 million. We then have Silver Peak at 3 million. We then have the Ditau asset at 2 million. We then have the Alamo Gold asset at 5 million. And that brings us out with a sum of the parts summary there. And I've not included some of the other assets that Power Metal are working on. And I've not included either. I've not included or made no allowance either for the Power Metal Resources Junior Resource Fund, which is target investment in undervalued junior resource companies. Of course, Paul and the team actively have some assets underway at the moment. So we take that. That's a sum of the parts valuation of 71 million. And I think that's a very conservative valuation. I may have overvalued some assets. I may have undervalued some assets, but I think put together, that's that really gives an idea of the nascent value that sits within this company. Any development at any time on any one of those assets could see it explode into life. And of course, once the Gold Metal Resources IPO completes in June, then the FDR follows suit, and First Class Metals, of course, that's another IPO that the company is engaged with. I think we're going to see an explosion in value in this company, and the movements we've seen this week as the share price has moved back to reclaim that 1.7p level. I think it's only the start. If we took 71 million and compared to where we are now, I mean that's getting on for sort of 4.5, 5p straight away, and that's a very conservative valuation, even so.
Yeah, I agree. I think that is a conservative valuation. 71 million. It's about three times from where we are now, isn't it? At 24 million. So yeah, I would say that was on the conservative side, Alan. But thank you for sort of contextualizing all of that for us. And these aren't just pie in the sky numbers. You've done your research into this and really looked at comparable projects and valuations, haven't you?
Well, I think that's what you have to do. Now I've used, with the uranium assets, I've used Blue Sky Uranium, which is the TSX relisted company. So you might say, well, no, Blue Sky is totally different. So I'd rather use this company here. So pick another company. Do that by all means, but make your comparisons, and that will give you some idea of where the market currently sees the valuation for a uranium company with comparable assets. Castillo Copper, I think, is a good comparison too. Castillo Copper has these four assets, three assets in Australia and one in Zambia, 28.6 million Aussie dollars. So that equates to about 16 million. So I think comparing those to the asset, the Gawler asset in Australia, the Kalahari Copperbelt asset, and the Kalahari Copperbelt asset is, of course, not too far from Sandfire Resource, the Sandfire asset, which Paul bought to fruition with Metal Tiger, and I think the work they've already done in the area is showing very strong copper grades. So I think that's a very reasonable comparison. And then of course you take the pre-IPO stuff, and then you take the Tati asset, which is 100% owned, Silver Peak, and there'll be other assets within the Power Metal asset portfolio, which maybe I've not touched on. So I feel this is a very conservative sum of the parts valuation as it stands at the moment, and others may say, well, no, I'd value it at twice that. I put the valuation at 140, 150 million. Well, that's as may be, but I think you've got to start somewhere. And if you're going to make a reasonable comparison, add a conservative valuation comparison too. These are sort of numbers. This is where Power Metals should be right now.
Good. Thank you. And yes, you're right to see the share price start to tick up again, back to 170 over this last week. I think that's helped by, I believe there was a rather large seller in the background who is probably cleared now. So it's nice to see some value coming back into Power Metals. And I'm sure I think it's good for other shareholders to do some comparisons as well and see what value they come up with and see how it kind of matches with your analysis. But for sure, Power Metals is undervalued, and it's also a very difficult one to value just with the sheer number of projects that are going on. But at the moment, at 24 million, with everything that's going on, yeah, it's got to be undervalued. And hopefully not too long before we can actually see some real value attributed.
Well, I think the way work is progressing, and the amount of news flow that comes out of the company, it's a massive news generator. And I said in a tweet the other day, as the share price starts to move, this is a real juggernaut of a company. Make no mistake about it. There are so many. It's not a company with one or two assets. There are 14 to 15 different assets and a whole range of other stuff within that, and any one of those projects could still see a massive re-rating, which of course would have a huge impact onto Power Metal. But I think I think starting somewhere. As I say, you may disagree with the companies that I've taken on board to make comparisons with, so that's fine. Pick another company in the sector. If you enjoyed this interview,
then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all you,
all our
Alan.
programmes
That's half an hour there, just on Power Metal Resources.
Thank you for
Thank you very
watching.
much for that. It's good analysis.